Are you interested in investing in small-cap stocks? Take a look at our list of 7 of the best-performing small-cap stocks that are fantastic buys in 2021 with price tags of $5 or less. Let's tune in to the video. Number 7. Limelight Networks Incorporated with a market capitalization of $438.19 million. Limelight Networks Incorporated had a 15% rise in sales over the previous year, with revenue reaching $230.2 million in 2019, up from $200.6 million in 2019. The company's GAAP net loss for 2020 grew to $19.3 million, up from $16 million in 2019. The distribution content network's full-year results have been outstanding, and this stock has now crossed into double digits in terms of sales for the first time. In addition, the stock saw a 35% increase in full-year adjusted EBITDA from 2019 to $24.5 million, as well as a new president and CEO, Bob Lyons, who brought a fresh set of innovative ideas to the firm. Content delivery, edge compute, cloud security, and video delivery are among the services provided by the company. Then there's the stock's new generation real-time streaming service, which provides live video streaming from anywhere on the planet with minimal latency. Moving forward, the easygoing streaming viewing experiences are a definite approach to draw audiences' interest. Within the company's Q4 performance, LLNW fell well short of its previous Q4 results, with generated revenue of $55.4 million compared to $60.1 million YOY, indicating an 8% decline, and adjusted EBITDA of $3.6 million compared to $11.4 million in Q4 2019. Despite recent dips, the stock is positioning itself for 2021 and beyond, with the company's new CEO at the helm, the launch of its real-time streaming offering, and other promising prospects. This may be the powerful push ahead that LLNW stock required, demonstrating that now is an excellent moment to invest. Number 6. LiveX Live Media with a market capitalization of $334.37 million. Over the last year, the music, audio, and video streaming platform has been a lifesaver for many music fans who couldn't afford to attend a live performance. LiveX Live Media makes it possible for people to have virtual parties by broadcasting live performances throughout the pandemic, resulting in millions of views throughout its network and over 1 billion views on the social media platform TikTok. Because of the COVID-19 pandemic, the stock's durability has been outstanding over the last year. Revenue grew by 96.9% YOY in Q3 to $19.1 million, leading to a 9-month revenue rise of 53.5% to $44.2 million YOY, according to the company's recent Q3 report. Another highlight for the stock was its contribution margin, which increased to a new high of $4.6 million in Q3, more than doubling from the previous year's $2.1 million. In Q3, GAAP loss from operations improved by 4%, culminating in a 27.2% improvement over the previous 9 months. With the globe currently working under COVID-19 regulations, this method of internet streaming will undoubtedly remain popular for many years to come, particularly as the world transitions farther into the digital realm. Number 5. Telefonica SA, currently trading at €3.86 per share. For many years, the telecommunications sector has served as a safety net, and communication via phone has become the way ahead globally in the last year, as many people have been unable to have face-to-face contacts. Additionally, as it pushes towards the area of the 5G revolution, the communication industry aims to achieve even more success. Telefonia SA, a Spanish telecommunications firm, is one of the world's major telephone carriers and mobile providers with a stronghold in Europe. The stock is also known by several other names, including O2 and Vivo. Despite a drop in sales during 2020, as indicated by the stock's Q4 results, revenue fell 12% to €10.9 billion YOY in Q4, but the stock's net income increased by slightly under 40% to €1.582 million in 2020. Looking forward, as the firm promotes its next defense cybersecurity solution to guard against cyber attacks as one of the newest new pieces of technology, as well as developing and pushing its 5G route, this stock might see higher profits in the post-pandemic future. Number 4. Drive Shack Incorporated, with a market capitalization of $330.09 million. Drive Shack Incorporated is an American public golf course and entertainment firm that will undoubtedly experience increased activity once the world returns to normalcy. However, if you don't live in the United States, you may not be aware that the United States' relaxation of lockdown regulations may differ from the rules in your country. But for foreign golf enthusiasts, this is where this stock may profit more via tourism. DS just released its Q4 and full-year earnings, which performed admirably despite the tough year. In Q4, the firm had a positive adjusted EBITDA of $5.3 million, up from $7.4 million in the same quarter last year, although overall revenue was down 16% YOY owing to a substantial effect of COVID-19. The firm has already begun to promote the reopening of golf courses around the United States, including one of its key courses in Orlando, Florida, which reopened in December 2020 and earned $7.3 million in revenue in Q4, down from $5.7 million in 2019. Nonetheless, all of these factors may be viewed as positives for the stock since we continue to live in difficult circumstances across the world, but they demonstrate that demand remains strong. With a share price of $3.22 and a consensus buy rating, this penny stock under $5 is proving to be one of the most attractive and competitive penny stocks available to buy today. With an average analyst price target of $5.25, this penny stock under $5 has a potential upside of 47% from today's price. Number 3. Organigram Holdings Incorporated, with a market capitalization of $970.16 million. The news of states throughout the United States legalizing marijuana use has captivated and continues to fascinate investors' eyes across the world as a sector with enormous development possibilities, and they are not wrong. New York became the latest state to legalize recreational marijuana usage in recent days, and no doubt others will follow suit now that the new president Joe Biden is in office, who's supportive of such actions and has strong federal backing. The company's Q4 revenue grew by $3,698 to $20,400 from $16,290 in Q4 2019, but cost of sales increased substantially from August 2020 to August 2021, owing to a considerable increase in sales volume. As a result, the firm was able to continue to reduce its debt levels, which decreased to just fewer than 50% by the end of 2020. This cannabis stock is a penny stock must-have to add to your collection, as the leading Canadian company continues to deliver and push forward its range of goods for both recreational and medical marijuana usage, and as more states give legalization in the United States. Number 2. Nokia Oy, with a market capitalization of $22.81 billion. The Finnish multinational telecom stock has seen its fair share of ups and downs thus far in 2021, fueled by the Wall Street Bets community on Reddit. NOK shares rose to a high of $9.79 per share in January before settling back to its current mean price of $4.02 per share. It was verified in the company's Q4 report that net sales dropped by 6% on average year over year, with sales down by 4.8% in Q4. In the grand scheme of things, NOK performed admirably given the problems the globe has been experiencing, even outperforming certain Wall Street experts' expectations. NOK has also stated that they are in the black, with net cash and current financial investments totaling 2.5 billion euros, up 0.8 billion euros year over year. The gross margin and operating margin both improved by 2.1% and 1.9 percentage points, respectively. Nokia's goal is to fully focus on being a strong leader in the new 5G network enrollment, with a growth that even above the company's goal of 35% on KPI in 2020, hitting 43%, indicating that the business is on pace to meet its objective of 70% by the end of 2021. Although Nokia has a long way to go before fully transforming into a positive beam of light, it's certainly on its way, making this penny stock a potentially smart purchase to add to your collection while it's trading at $4.02. Number 1. Cadmon Holdings Incorporated, with a market capitalization of $623.69 million. This biopharmaceutical business aims to find, develop, and deliver revolutionary treatments for medical conditions that are currently unmet. Belumosudil is an orally given drug used to treat inflammatory and fibrotic issues. KDMN is a company that develops next-generation immuno-oncology treatments for the treatment of cancer. Finally, the stock's main IO product, KD033, is used to treat liquid and solid tumors. The firm recently revealed the result of its ongoing trial of the medication KD033 101, which expands the product's therapy for advanced tumors. Analysts covering the stock are especially positive, with an average price goal of $13 or a 262.12% increase over the firm's current price and a high price objective of $20. If you're seeking to add a biopharmaceutical stock to your portfolio in 2021, KDMN is a good choice with a high growth potential. To summarize, penny stock investment may be highly profitable for investors if the proper amount of research is conducted. That concludes today's video. Thank you for sticking with it all the way to the finish, and we'll see you in the next one.